Hey guys, it's Carter. Welcome back to the channel. Now in today's video, we are going to be talking about the one, the only Dollar Tree. Dollar Tree stock today has been getting absolutely annihilated. We're going to be talking about what's going on. Am I buying shares? Should you buy shares? And kind of some strategies that you guys could use to possibly buy this stock. So guys, I hope you guys all enjoy it. Like, subscribe. Also, check out my swing trading school. I'm a full-time swing trader. For those of you that don't know who I am, I've been for over 6 years, and we do have an amazing school where we have group chats, private live streams, all that stuff. It's absolutely fantastic. Code YouTube, 20% off. But guys, let's jump into this here. So looking at Dollar Tree stock, right, in the past year or so, we've just seen this general sell-off where the stock pretty much has gone from 177 all the way down to lows at 102, back up to recently 128. Now, as of today, the stock did fall. You guys can see it actually got crushed about 14%. As we look at the minute chart, you guys can see just how crazy this sell-off was. In a matter of a single day or after hours, it went from $151 all the way to lows at $126, which is a crazy move. Now, during the market hours, it really didn't do much. It did establish some resistance at 129 and some support near 127. So if you guys were looking to trade this stock, those are some of the support and resistance for the day. But one of the things that's important is you need to understand why we're getting sell-off. If you're looking to invest right now into Dollar Tree, you need to understand what's going on. And guys, they didn't do very well. Well, kinda. So what they did is they actually beat revenue. We had a revenue rise. As we look at it here, the total revenue for the quarter ended February 3rd was $8.64 billion, which is so much money. But that was up from 7.72 billion from a year earlier. So beating expectations, which is always good here. But one of the things here is they're beating expectations, but they're not. Just because they have an increasing revenue doesn't mean they're beating expectations, really. Because analysts, pretty much Wall Street, expected about 8.65. So they did fall actually a little short, but that's not what concerns Wall Street right now. Right now, one of the things that Wall Street is a little nervous about is this. Dollar Tree plans to close 600 Family Dollar stores in pretty much the next year. 360 Family Dollar outlets and 30 Dollar Tree stores are set to shut down gradually as their lease agreements expire in the coming years. So this is why we're getting nervous investors, which cause panic, which cause sell-off, right? I do think another thing that is important right now is we're seeing the revenue, that in my opinion is still going to be low. The retailer said that the revenue for the upcoming quarter should be anywhere from 7.6 billion to 7.9. Wall Street predicts it to be 7.69 billion, which is still good. But when you compare it to this quarter where they're expecting 8.65, I think that's a little thing to be concerned about. On top of that, right now, we're just seeing a bunch of volatility from the marketplace. We're seeing the S&P up and we're seeing tech stocks just soaring up. So right now, I do think with, a lot of nervous spenders right now and Dollar Tree, what we've noticed actually out of this store is their margin has slowly been decreasing, right? Looking at this net margin, you guys can see it's actually down about 24%. And then the previous quarter, it was down 48% and then 47%, then 8%, and then only one good net margin was all the way back in 2023 quarter 3. So, I think right now we're just seeing a bunch of volatility. So a good strategy that I would recommend if you're looking to invest right now into Dollar Tree would be to dollar cost average it. Dollar cost. But dollar cost averaging Dollar Tree is a good investment strategy. And I know I talk about it a lot, but it's incredibly powerful because you're investing consistently rather than just dumping a bunch of money right now. Imagine you dump a bunch of money right now into Dollar Tree and it just starts selling off, right? It sells off more. Then you miss an opportunity to buy it lower compared to dollar cost averaging where you're just investing consistently. Now, to answer that question of am I buying shares at these lows? Absolutely not. I'm not a huge Dollar Tree person. Not saying you can't make money from it, but I just don't like this general downward trend in the past year. That concerns me. To put this in my long-term portfolio, I probably want it, and I'm not going to. But yeah, I think the best strategies right now for this stock is dollar cost averaging, or try to buy it under $100. That's the only way I would ever look at buying this thing, is if it was severely undervalued, and it was, undervalued on every indicator you could think of, and maybe I would consider it, or a dollar cost averaging. But guys, this is everything going on right now with Dollar Tree. We're just not getting good. We're getting good revenue, but on the flip side, it still didn't meet up with Wall Street's expectations, as well as the closing of stores, as well as some issues with their EPS and their earnings per share. So, that's what's going on. Is it something to be concerned about if you're looking to invest into Dollar Tree? Absolutely. The only thing that concerns me is the closing of stores. Closing of stores means lower revenue, which is overall going to dilute and, make the stock fall even more. And that's what scares me. But yeah, I'm not buying it, and I wouldn't recommend it. But guys, this is all my opinion. So do your own research before you invest, and we'll see you guys in the next one. Take care, everyone.